Number 4 is you get your money advice from a bank. And what you see today is that almost half of Americans are paying $1,000 a month or more on their new car payments. And not just that, more than half of young people who go out and buy homes have regrets about their home purchase because they bought way too big. Now there's a couple things that I want you to understand here. First is on the theory side, then the practicality side. On the theory side, I want you to understand that your bank is in the business of lending you money. The way that your bank makes money is when they lend you money. When they give you money to buy something that you don't have the money to buy yourself, because then you're gonna have to pay the bank back plus interest. So it's not in the bank's best interest to give you necessarily financially smart advice, because if they tell you to go out and buy a car that you can afford, they're not gonna make any money. If they go out and tell you to buy a home that's more within your budget, you're gonna make less money. So your banker is incentivized to go out and get you to buy things that you can't afford, because that's how bankers make money. Now, does this mean that your banker is an evil person? No, they're trying to feed their family as well, but the way that they feed their family is when you go out and buy things that you can't afford. And it's not your patriotic duty to make sure that your banker is making record-breaking profits. So, understand now that your banker is in the business of trying to sell you loans, but it's in your best interest to make financially smart decisions. So now that you understand this, let's talk about the practical side of you going out and buying something like a car or a home that you can't afford. Let's assume that you're going out and you're paying $600 a month to finance a new BMW or a Lexus or a Mercedes, which is significantly less than the $1,000 car payment that I was telling you about, and it's also less than the average new car payment in America. So we're going to assume now that you're being kind of financially smart here. And so now, instead of you spending the $600 a month on your car, let's assume that you take this money and you put it into the stock market. You put it into the S&P 500, which has averaged 10% a year of growth for the last number of decades. For around the last century, it's been around a 10% a year growth. Now, this 10% a year growth isn't 10% year after year after year. Some years are less, some years are more, some years are negative, but it averages out to 10% a year. Well, if you do this for 40 years and you do this and the 10% return, well, now after 40 years, guess what? You're going to have an investment account worth $3.5 million. But if you act like everybody else and you just pay the $600 a month year after year after year, after 5 or 6 years, you're going to pay off this nice BMW or Mercedes and you're going to have no car payments, and then you're going to trade it in for a new car. And now your payments are going to be $675 a month. And then 5 or 6 years later, you're going to do it all over again and again and again. And this is fine for the average person. You never get out of this car payment game because you just keep playing this payment game where you buy a car, you finance it, you pay it off, you get a new car, you finance it, you pay it off, you get a new car, and you do this until you die. And then guess what? Well, instead of having this $3.5 million investment account, you have a car that's worth nothing, because after every few years, this car is losing a significant amount of its value. Well, you're losing the opportunity to invest your money. And if you say to me, but Jaspreet, 40 years is such a long period of time. Well, okay, let's cut this into a smaller period of time. Let's just say that you do this for just 20 years. Well, after 20 years, assuming the same returns, you're still gonna have over $450,000, assuming you can get the same 10% return with a $600 monthly investment, as opposed to having a car that's worth nothing, that's losing value, that's just causing you interest. And this is also just on a $600 monthly car payment. Now you're gonna say, but Jaspreet, I still need a car to get to and from work. Sure, but in order to buy this car, you had to put $8,000 down in order to be able to get this payment. Now, instead of going out and putting $8,000 down, use this $8,000 to buy a car with cash. Get yourself a nice Toyota Camry, a Toyota Corolla that's used in good working condition, that will last you a decent amount of time. And now not only do you get to not have to pay the $600 a month, and you can use this money to actually make you wealthy, but now you also don't have to worry about the premium gas. You don't have to worry about the expensive insurance, and all this is additional money you get to put in your pocket, not to mention that the maintenance on a BMW is a lot more expensive than the maintenance on a Toyota. So yeah, you get to save the $600 monthly payment, but you're also going to save money in other places as well. And this is money you can use to make yourself rich first, which is why I'm not an advocate of you going out and financing cars. Number 5 is you have no financial protection for your family in case something were to happen to you. The way I want you and your family to be wealthy is over the course of your career. You are working to buy assets, stocks, real estate, and my favorite is cash flow producing assets. So cash flow producing stocks and funds and cash flow producing real estate. That way, eventually you can get to the point where you can live off of the cash flow from your assets. Now, if something were to happen to you, if you were to tragically pass away, your family is still okay because financially, they have these assets which are going to continue paying for the lifestyle, and now you don't have to worry about that side of things. But if on your journey to build this wealth, something were to happen to you, you can't work, or you were to tragically pass away, well, now your family, especially for the breadwinner, could be stuck in a very bad financial situation, which is where you want to have some sort of protection. I like to call this bridge protection. This is called term life insurance to protect you. Now, the thing I want you to understand here, because a lot of people get this confused, is term life insurance works kind of like car insurance. If you get car insurance, you're going to pay money every single month. And you only actually get any benefit out of car insurance if you get into an accident, which is where hopefully they'll give you some money. Well, you don't want to get into an accident. Hopefully your car insurance money is going to go to waste because you don't want to deal with the headache and the physical pains of a car accident. It's the same thing here with term life insurance. The way term life insurance works is you're going to pay some money into this fund, and it will only pay out to your family if you are to pass away. If you don't pass away, you don't get anything, which is what you want. This is why, compared to whole life insurance, term life insurance is a whole lot cheaper. The way that I like to look at this is kind of that bridge insurance until you can get to that wealth. Until you have the cash flow from your assets that can cover your family's finances, you need to have some sort of protection, because if you're the breadwinner of your family and something were to happen to you, you want to make sure that your family is okay, and that's where term life insurance can come in and give your family that sort of protection until you have those assets. Once you have the assets, get rid of the term life insurance. You don't need it anymore because you have your assets to make you wealthy. So just understand the kind of different processes with that. We're going to jump back into the show in just a minute, but before we do, here are a few words from our sponsor, Policygenius. Term life insurance is a financial tool that you can use to protect your family in case of a tragedy, because if you are the breadwinner of a family, and if something were to tragically happen to you and you lost your life, well, that's when term life insurance would kick in and give your family a check. That way, at least your family would be okay financially. Now, if you are looking for term life insurance, Policygenius can help you because they are an insurance marketplace, so they can help you save money and find the best option for you. See, Policygenius is an insurance marketplace. They're not an insurance carrier. So the way it works is you go onto the website and enter in a few pieces of information, which just takes a few minutes, and then they will present you with different term life insurance quotes from different insurance carriers. That way you can pick the best option for you. The Policygenius service is completely free to use, and if you have questions, you can talk to a Policygenius insurance expert and get unbiased advice to find the best option for you. The Policygenius service is completely free, and if you have specific questions, you can talk to a Policygenius insurance expert and get unbiased advice. So if you want to learn more and get a free term life insurance quote, I got the link to where you can do that with our sponsor Policygenius down in the description below. Minority Mindset is a paid partner with Policygenius, meaning if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and get a free term life insurance quote with Policygenius, I got the link to how you can do that down in the description below. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.